Hey guys, welcome back to Investment. In this video, we're comparing SCHD versus VGT, dividend versus growth. And I'm going to show you exactly how I researched them using Seeking Alpha and a dividend calculator so you can learn and do it yourself. Before we get into the video, let's say we're using dollar cost averaging and we're buying $20 per day in both ETF to see which one will be more worth it by our retirement. Alright, with that being said, let's get straight into the video. First, let's go into Seeking Alpha. Let's start with SCHD. Alright, so far this year, SCHD is up about 11.6%. Their main holdings are energy, consumer defensive, and healthcare. This is important because we need to know what kind of stock they're holding. If we take a look at their dividends, it's about 3.3%. Dividend growth is about 5.3%. Let's take a look at SCHD dividend yield. They have been pretty steady. There are times where it reached all the way up here, breaking 4% level. Time to hop on the dividend calculator and let's do our math. Right here, put SCHD. Keep these three right here the same, and let's say you start investing today, 0 shares. Okay, keep the price the same. With the annual contribution, we're gonna do $20 times 251 days. That's how many days the market opens per year. Grab this number and put it right in the annual contribution. If you're investing this in your Roth IRA, put 0% on this section right here. Keep this one the same. Initial annual dividend yield, that's where we come back to this section right here. Scroll down a little bit and it says dividend yield right here. Expected annual dividend amount increase per year. We can find that number by scrolling up a little bit and it should be right here. Expected shares appreciation. So let's say SCHD is growing about 8% per year, and put how many years you want to invest inside of SCHD. For me, I want to invest by the time I'm 60, so I'll put 40 right here. Alright, if you scroll down a little bit, when you're investing by using the method dollar cost per averaging, it's a long-term game, okay? So you're investing long-term, 40 years, 30 years, 20 years, 10 years, multiple decades. So let's scroll all the way down here by the end of our retirement. By the end of my 40 years investing in SCHD, I should have around 3,179 shares. Dollar cost per averaging is all about compound. By the end of my 40 years, I'll have about $2.1 million. Every single year, I'll get about $25,000 in dividend. Let's move on to VGT. So VGT is all about growth. This year, VGT is up about 15%. Let's take a look at their holding. They hold 99% of technology, and you can take a look at what they're holding right here. Nvidia, Apple, Microsoft, Broadcom. If you like any of these stocks right here, I recommend buying VGT. We're not going to care too much about the dividend because they're not mainly focused on dividend, they're focused on growth. Now let's move here and do our calculation. Again, keep these the same. Put 0 shares, 5,020. If you're investing in a Roth, put 0%. Put the expected annual dividend amount, we move here. So let's not use this number right here because it's kind of outdated. We'll be using this number on the 5-year growth, but it doesn't grow consistently 0.91% every single year. Let's say at the very most 0.7. So put 0.7%. Put the expected annual share price appreciation. Let's just put 12%. And for me, I'll be investing about 40 years. Okay, let's take a look at all the way at the bottom. By the end of my 40 years, I'll own about 57 shares and I'll have about 3.9 million by the end of my retirement. And we'll get about $226 annually in dividend. Alright, now let's compare the two ETFs. If you invest $20 per day for 40 years and end up somewhere around $2.1 million, here's the real question. How much can you actually withdraw every single month without blowing your account? So let's keep this simple. A super common rule people use for retirement withdrawals is called the 4% rule. So let's apply that same method for SCHD. The idea is you withdraw 4% per year and you keep the rest invested so your portfolio can still grow and hopefully last decades. So if SCHD ends up around $2.1 million, we will multiply and use the 4% rule, which is 0.04. That should bring you to an equal $40,000 per year you can withdraw without any issue. If you break this down even more, let's divide this by 12. By the end of your retirement, you could withdraw $84,000 and live off that, which is equivalent to $7,000 per month. Now let's apply the same rule for VGT. For VGT, we end up with $3.9 million. We timed that by 0.04, which gives us about $156,000 per year. And if we divide this by 12 months, we get roughly $13,000 per month that we can withdraw safely. Now keep in mind, this isn't guaranteed. Markets goes up and goes down. But seeing this gives you guys a solid baseline to understand what retirement incomes might look like in the near future. Now, seeing these numbers will give you a better understanding on how compounding works. The real question isn't, is 13,000 per month possible? The real question is, as an investor, are you willing to invest and stay invested for many decades? So that way your money can compound day by day and year by year. Now, I will give you guys my personal opinion about this. Should you invest in SCHD or VGT? This isn't financial advice, but for me, I am willing to invest in both of them because both ETFs are heavily influenced by different sectors of our economy. Now, if you want to invest in something, you need to know your risk tolerant. Investing in something like growth, the market will move up and it will move down. So numbers will fluctuate very quickly. But when you invest in something like the backbone of the economy, investing in SCHD will keep your portfolio very equal and balanced. And when you invest in something like VGT, the market will fluctuate, but there are years where it'll give you 15% return. As your own individual investing, you have to make your own decision, whether you want to buy both of them or you just want to stick to one. But just know that the best way to go about this is buying both of them. With that being said, this is the end of the video. If you guys enjoyed this, please give a like and subscribe for more content just like this. I'll be posting more consistently now, so hopefully you guys stay tuned for that. All right, take care guys.